Hello again, fellow BeachBum traders. Welcome to part 2 of our weekly trading game plan for the week of June 27th through July 1st. And in part 2 of our weekly trading game plan, we'll talk about our updates to our various watch lists for this week, for what we'll be watching to trade for the coming week. Hopefully, you have already seen part 1 of our weekly trading game plan, called Preparing for the Coming Recession. So if you have not already seen part 1 of our weekly trading game plan for this week, we'd highly recommend that you see that. It has all the market analysis, all the input data that we use to select our stocks for our watch list for this week. So again, thank you for joining us in the live stream. If you're here, good morning, Spacula. Thank you again for joining us, and we'll go ahead and get started. So start out with our trade updates for this week. We didn't do any trades, and I'll briefly talk about our trading style, and I won't spend a lot of time, but we don't typically trade a lot. We're primarily swing traders, and sometimes there are no new setups at a support or a bottom level that we want to take a new position. Now, does that mean we're not doing anything? No. And I will show you what we were doing was managing our trades, moving stops up, looking for opportunities, etc. So when when something isn't set up, sometimes the best thing to do is sit on your hands. You'll hear other people say that is don't force trades. If nothing is fitting your strategy, your techniques for trading, then it's probably best not to trade. Now, again, I was very busy protecting our profits, moving stops up, looking at opportunities, doing further analysis, which you'll see, finding future opportunities. Now, having said all that, and we'll talk again more about what things to do when trading is not conducive to your style of trading. We'll talk about that through the summer. Summers tend to be slow in the markets, or slower in the markets. In fact, I was tempted to title one of these game plans the summer doldrums, and maybe we will. Trading does tend to be slower in the summer, so be prepared. Which is not bad. There are still good setups, still ways to make money, even if it is slow. Now, having said all that, if we do make a trade, you can see those updates in the alerts channels within our Discord, and you can find the invite to our Discord in the description box below. And we have 2 channels of alerts, and our Patreon members will have access to these channels. And if we get a price alert from Thinkorswim, it automatically gets posted in this Thinkorswim TOS alerts channel, and that just says, okay, a price alert was hit in Thinkorswim that I previously set. If we then follow that up with a trade, then I will update that posting with what trade we made. So you can get alerted to our trades via our Patreon or through the alerts channels in our Discord. So again, lessons learned. I didn't have anything real specific. I would love to hear from our fellow BeachBum traders in our Discord or in your comments. As you learn lessons in the markets, please share them with your fellow BeachBum traders. We're here as a community to help each other, support each other, and help each other be as successful in trading as possible. So I didn't, again, have anything specific, but as I learn things, I will share it with the community for everyone's benefit. So now let's talk about updates to our watch list. So I'll quickly go through them, and then we'll jump over to Webull and actually look at our watch list in Webull. And as you'll see, we're paring down our watch list. Again, there's not a lot of really great setups. The markets have been pretty choppy, pretty flat. So right this second, there aren't a whole lot of great setups. So we're paring them down to what are the best setups right now. So we're going to take big lots off of our watch list. It already ran up. You should have seen in the alerts notifications that we're already long big lots. It is now a nice profitable trade. So again, this was one where I was managing our protecting our profits, managing the stops, moving the stops up as it crossed above higher pivot points. And so if it does turn back down, we'll take our profits and we may consider buying it back lower. And again, that's another strategy I want to talk about, and we'll probably look at BTI. We might look at big lots. Is protecting your profits, taking your profits. And since we're in a bear market, a declining market, there's opportunities to take a profit and then buy it back cheaper and play it again. So until we reach bottom and start going back into an ascending bull market, there's still ways to make money by taking profits, buying things back cheaper, swinging them back up, and we'll take a look at that. We still have Budweiser on. We still like Budweiser. You can see our due diligence video on Bud. And then as you will see in last week's weekly trading game plan, we added a number of uranium names. And then on Friday, uranium popped up. I wasn't able to catch that pop, but it was kind of what we were looking for was all the uranium names popped up because energy got a little bit of a boost on Friday. Now, if we get a little bit of a retracement in energy and that pushes uranium back down, as you'll see, we have a number of uranium stocks on our watch list that we like and would take long positions in. One is DNN. It's a pretty small, lower price one. And then you'll see we also have UROY and UUUU. And then in our bullpen, we have URNM. Good morning, Tanbir. Thank you for joining us. Glad to see you here again. So you'll see also with the decline in oil's come back down. So we're going to take our short out of our watch list. There isn't an immediate opportunity to short oil. Again, there's day trade opportunities going long, short these energy stocks. They are choppy. If you are a day trader and you want to try to day trade, scalp these guys, there will probably be opportunities on any given day to long or short the various energies. And we will look at my ETF spreadsheet in a little bit. But DRIP and SCO are the ones we use to short oil, and GUSH and UCO you can use to long oil. We're also going to take this FKWL off the watch list. It's an infrastructure play. It finally broke down through support, so it no longer looks attractive. It was a low float anyway, so we'll take that one off. Also, cold is the short on natural gas. Again, natural gas rolled over as we saw in part one. So again, there's not really an immediate great short at an extreme right now. So we're going to take it off our watch list. Now, if any of these, spike back up, we can always put them back on our watch list. Also, we're going to take Realty Income back off the watch list. It ran up. If it comes back down 65 or below, we always like and we take those opportunities. But right now it's up in the high 60s, maybe low 70s. So we like it 65 or below. So we'll just, we watch it periodically. So another uranium play we're watching is UROY. This is a Canadian royalty corporation. Again, it looks attractive. We'll take a look at it in a second. And UUUU we mentioned, that's another uranium play that's potentially attractive. Also, we're going to take the leveraged ETFs we use to trade the VIX. UVXY is the long on the VIX. SVXY is the short on the VIX. Again, if you're day trading, this is, I think, a great opportunity, day trading, scalping, etc. On any given day, you can see which way the VIX is going and ride it in that direction using these leveraged ETFs, take your profits and then play it again. But right now the VIX is sitting in the mid-20s, a little below 30. There isn't a real great extreme swing in it. So we'll keep an eye on the economic data this week and see if we get any spikes in the VIX or if it continues to revert to its mean and go down. So right now, again, I don't see any immediate long-term swing opportunities, but there's always good day trade scalping opportunities using these leveraged ETFs to play the VIX. And then we'll look at what we've done with BTI. We're not watching it. I don't think it's a great buy right now. It's already run up. We have a very large long position in BTI. And if the market does roll back over, as you'll see, we're going to take our profits and we'll buy back cheaper. So as the market continues to make these bull rally spikes up, we'll make a profit, and then it'll stop us out. As it continues to decline, we'll buy it back cheaper. We'll keep doing that until the market, heads back up on a consistent basis. Yang and yen, we've been talking about for a while too, and these are great ones for any kind of day trading, scalping, for swinging or scalping the Chinese tech stocks. Yang is the short on the Chinese tech stocks, and yen is the long on the Chinese tech stocks. And on any given day, they're either running up or running down. And you just look at 4 a.m. and then at 7, etc., see which way they're headed. What are people saying about Alibaba, JD, Pinduoduo? You can hear that on some of the day trading channels, and you can pick whichever one of those is in the direction of the momentum for the day. I would rather short Chinese tech stocks in terms of holding it for any kind of swing, just because I don't trust the government and they could rug pull you at any point. But as long as you're careful, use your stops, etc., these are great money makers on any given day. So, and again, if we make any updates intra-week, we will post those updates to our Patreons, and we also have a watch list channel available to our Patreons in our Discord, and we will post those watch list updates in there if we make intra-week changes of any significance. So now we'll jump over to Webull, and we'll go through our main watch list. So as you can see, it's significantly shorter. We pared it down to just, the current best opportunities. So I'll just whip through these real quickly. So here's Budweiser, Anheuser-Busch. You can see, we like it 51.45 or below. It's run up a little bit. It did double bottom kind of nicely, and I didn't quite catch it. If it comes back down, we still like it. Looks pretty stable, which is good. And this is one that's, they have pricing power, beer, people, and then they're reasonably recession proof. People drink as much or more beer in a recession as previously. So, and they just announced that they're going to increase prices. So they do have pricing power, and that may help their earnings or sentiment. DNN we talked about, it's kind of a low price uranium play, has a real nice swing. We made money on DNN over time as uranium cycles. You can see I kind of like it $1 or below. The low would be 92. Probably should have bought it there right before uranium all started running up on Friday. That was a good point. Hopefully we'll get a little dip in these uranium stocks and get a crack at them. I think it's a nice cycle for uranium. UROY, another uranium play. You can see they all bounced up on Friday and kind of missed that bottom there, but again, hopefully we'll get another crack at them. UUUU, again, this is one we played in the past, has a nice cycle. You see we like around 5, and it's got a nice, nice profit. And I'm going to come back to BTI, and then I'll take it off. But here's Yin and Yang, the Chinese tech stock. So you can see here's the short. I almost bought it on Friday. I probably should have put the order in at 1096. I'm looking for it at 1095. And it bottomed at 1096. However, these guys are going to rebalance at 4 a.m. on Monday. And there's a very good likelihood that if Yang dips or gaps down on Monday at 4 a.m., we will probably take a significant size long position in Yang. Yin's the inverse, so you can see as Yang goes down, Yin goes up. So again, you can swing these guys all the time, and they're ATMs, money machines, I believe Spacula likes Yin and Yang, so I do too. Again, I prefer the short, but these guys are great opportunities to just constantly make money, even if the market's pretty flat, pretty volatile, not going anywhere. You can make money on any given day using these guys. So now let's look at BTI. Again, I pointed out we didn't actually make any trades this week, or we didn't initiate any new positions this week. But you can see BTI, which is the total market index fund that we like for just kind of parking a bunch of cash in, waiting for the market to recover, run back up, etc. And we started to get a couple green days in some of the markets over the end of the week, and BTI ran up. So you could see what I was doing is as BTI crossed these various pivot points, I'm moving my stop up to be just below the last pivot point that it crossed. So if on Monday, if BTI crosses this R3 level, which is 195.71, well, I'm already one level below, so I'd want to even go one level higher. So once it clears the next pivot point, then I'll move my stop up to this R3 level. For now, if it rolls over, you can see at 192.73, I would stop out, and then we would look to buy it back again, cheaper. Wherever the bottom is, we'd look to buy it back down here. So you see we've got a decent profit right now. And again, if we get stopped out, that's fine. We'll buy it back cheaper. So for now, I don't think creating a new position in BTI is that great. Price isn't that great. We'll just wait for it to come down and buy it lower. If you want a dollar cost average into it, that's fine. So I'm going to move it to my ETFs watch list. As you can see, you can have many watch lists in Webull, and it's easy to move things around. Yeah, yes, Tanvir. I've had the same problem. Yeah, I have an old 401k in Fidelity too, and it's very limited. That's why we use these ETFs, because you can use ETFs in that 401k to long or short. We're finding pretty much anything, any theme, topic, index, etc. So that's again one of the main reasons that we're using ETFs is a lot of our funds are tied up in various retirement accounts, and we can't short individual stocks. I know Fidelity also has some limitations on penny stocks, which I think they're qualifying as $5 or less or something like that. So yeah, Fidelity is my least favorite brokerage account, but I'm kind of stuck with it right now until I move that account out. So, which is something we're probably going to do, is probably move it to Webull. You can do a rollover IRA. You can take a 401k out of Fidelity as long as you're no longer employed at that company, and you can move it to a rollover IRA in Webull. So I hope that potentially will help you either now and or in the future. So while we're talking about Webull, just reminder, if you're not already using Webull, they are currently still offering the 6 free stock special that they started with their birthday, their 4th birthday. They started the 6 free stock deal, which is probably the best deal I can remember offhand. So if you don't already have a Webull account, this is our favorite trading platform. Again, we have numerous accounts in Webull. You can have multiple accounts. You can have a cash account. You can have a Roth IRA account per person. Actually, I have 4 of them. So you can have a margin cash account or a regular cash settled account, etc. So you can have multiple accounts. I don't think they'll give you the free stocks for each one. I think you can only get the free stocks once. But if you're not already using Webull, again, you can get 6 free stocks now by opening your account. You get 2 up to $300 each when you open your account, and then an additional 4 free stocks, each valued up to $3,000 for depositing any amount in your Webull account. So again, it's our preferred platform. We love Webull, and if you're not already using Webull, get your 6 free stocks. If you don't like it, you can always cash your stocks out, take your money, and it's just free money. So that's what we currently have on our real-time watch list. These are the ones that we're watching constantly during the day. I have automated data collectors that are collecting the stats on these particular stocks in real time, which is another reason why I want to keep that list very focused and very short. because again, the faster my data collector can go through that list, and the more more real time the data I'm getting and the alerts I'm getting on those particular stocks, which are the ones I want to focus on for taking new positions. Now, our next watch list is our bullpen. And this is a list that I don't, we're not watching it in real time. I don't have it up in charts. What I do is my bullpen, if you're new to our BeachBum trading community, is at the end of the day, I go through this watch list and I see if the setup, the technical setup, looks any better in these stocks. But these are ones that look promising in the near term for the week, that they may present a good technical setup. So at the end of each day, I'll go through and I'll look at these, and if they look attractive, we'll move them up, put them in the game, move them up to our real-time watch list. If they break down and no longer look attractive, then we'll just take them off the bullpen. Yes, Tanvir. I heard that right before the live stream, and you'll see I have a news clip at the end about Biden is proposing that the G7 ban buying Russia, but ban importing gold from Russia. And yeah, okay. Let me defer that just a little bit until I get to that section, and we'll talk about that gold and that effect of Biden on gold in a second. I think that may create an opportunity. Again, I'll defer it for just a few minutes. Okay, so these are ones we've had on our bullpen for a little while. BDRY is dry bulk shipping, and again, that's declined, as we'll see. Again, may present some opportunities if those dry bulk shipping prices go back up. So I like this. Those shipping prices are very cyclical. CLIX is a way to both long online e-commerce and short retail stores. So we've heard the brick and mortar stores, particularly, your mid-tier Targets, etc., are in trouble. They're declining. The coming recession, I think, is not going to be friendly for them. And I didn't have an ETF to directly just short brick and mortar retail, but this one looks attractive for going both ways. Excuse me a sec. Okay, Ford Motor Company, we'll see. We've been watching. Looks attractive. They had an issue with their EV batteries. I would like it a little bit lower. We'll take a look at it in a second. This is a new one we're adding, is MKFG. It's Mark Forged Holding Corporation. It's a 3D printing company. You'll see I added it to our watch list of 3D printers. This is one also that ARK Invest Kathy Woods has been buying. I've seen it in the daily notifications recently, and it just popped up in one of my queries as being a potentially good setup for a swing. So I took a look at it. It looks like they're profitable, which is very positive. It's a little unusual for Kathy Wood stocks that they're profitable. So I found that attractive. We like the 3D printing theme. If you're not already getting these daily trade information from ARK, we published a video a long time ago on how you can get that information, also using the Lucid tracking site, how you can see what their current holdings are. Whether you like ARK, Kathy Woods or not, again, I find it useful information to know what they're buying and selling, because again, that could be support pressure or selling pressure on these stocks as they're buying and selling. So we'll take a look at the chart of Mark FG. Again, we like it because they are a profitable 3D printer. There aren't also a whole lot of profitable 3D printers. So again, we like that. We're going to take Roku off. It ran up again. We keep missing it. It bounces pretty quickly. You heard initially there was a rumor that Netflix was going to buy them. That didn't make a lot of sense, and that's apparently untrue. But apparently they are in talks with Netflix. Netflix is talking to Roku and some others about using their ad platform, which I think is a good idea. So, and that probably caused the run up in Roku. As you've heard for a long time, we like the concepts behind Roku, and we've just always been looking for a good stable opportunity to get in. So if it comes back down, we'll take a crack at it again. Another one we started talking about last week is swinging semiconductors. Semiconductors have come down. Even though there's still kind of a shortage in some of the types of semiconductors, it looks like it may be bottoming and might swing back up. So these are ETFs, leveraged ETFs you can use to swing semiconductors. Again, semiconductors are a great commodity. It has a long-term swing cycle. So we shorted it, made some money shorting them, and then they came down. So now we're looking for a bottom to possibly long semiconductors. So again, either way, you can play these on a daily basis to scalp them, whichever way semiconductors is going. A lot of times those move with the NASDAQ, with tech stocks, and or they can drive the NASDAQ and the tech stocks, particularly when semiconductor companies report earnings, etc. Stag Industries, we already have a sizable long position in Stag, and it's already run up, so I don't think it's a good opportunity for others to buy in now. We're still holding our position in Stag. Again, this is a monthly dividend-paying REIT. It's an industrial REIT, and again, it's kind of run up, so there's no use in watching it. We're not going to add to this position at this time. But we do like Stag. We like O too, so we take any opportunities we can to go long those, swing them up, take a profit, collect monthly dividends, etc. Has a large pending contract with the military. Well, that's good. I like that. Tanvir, thank you for sharing that. I may have seen that as a positive. And it's interesting that they're kind of down right now. So there's potential catalysts if that gets granted, etc. And then URNM is, again, another uranium one. As we'll see in Webull, it's a little high right now. So if I go back to Webull, we can look at the charts for these guys. So here's that dry bulk shipping guy. You can see it's not clear whether it's stabilized at a bottom yet, which is why I'm not putting it in the watch list yet. It looks like it may still be declining. Once it does stabilize and swing up, we'll probably take a shot at that, move it up to the watch list. Here's the clicks. You can see that's the online and short brick and mortar. Long online's kind of run up. I'd like it down here. Ford, again, I'd like it a little bit cheaper, better risk reward. We played Ford, I think, a long time ago. It was around $5. We played GE and Ford, I think, when they were about $5. That was a good deal. So here's Mark Ford's MKFG. You can see I'd kind of like it down here. It has run up a little bit. It looks like it might be coming back down. We'll see. Again, 3D printers tend to be very cyclical as well, based on sentiment. They tend to be pushed with the NASDAQ, the tech stock. So if it comes down and we get a shot at it, we kind of like that. We'll see. It may run away based on like the news Tanvir said, is that may be baked in already and it may be running away, and that's okay. I'm not going to chase it, but so as we'll see, here's the long and short on semiconductors. So here's the long. You can see it looks like it's kind of had a stable bottom in here. Popped up a little bit on Friday as the NASDAQ popped up and everything popped up. But down in this 12 area, you can see it's got a nice reward opportunity. So if we can catch that at a stable bottom and it looks like semiconductors are going to swing back up, that would be a long-term long swing for us. And then the inverse is the short. So you can see the short looks like it kind of rolled over. The long looked like it dipped up. So again, you can swing these back and forth all the time. I won't bother with treasuries right now. We're still looking for better opportunities in treasuries. Here's URNM. This is the other uranium one. See, it also made a bounce. I'd like it a little bit cheaper. And then we talked about yin and yang. So before, let's talk about gold. Since Tanvir brought it up earlier. As you can see, I put that note in here too as a potential shopping list stock. I'll come back to ETFs in a second. I think this may deplete supply of gold. So they're banning Russian gold, which means any supply coming out of Russia will not be the inverse of SOXL. Tanvir is SOXS. So this to swing semiconductors, SOXL is the long, SOXS is the short. Cool. So we were talking about gold. Yeah, banning Russian gold is going to deplete supply. Demand, is probably increasing. People see it as a hedge against inflation, store of value, a risk. It's inflation proof. It'll go up with the price of the dollar. So again, by diminishing the supply of gold should cause the gold price to go up. Now I'm going to flip over to this ETF comparison spreadsheet, which you'll see I made some modifications to, and we'll talk about this in more detail. But since we're talking about gold, let me just highlight some of the ETFs that we have for playing gold. So here's the ones that are long on gold. The one we prefer is GLDI, which is the Credit Suisse ETN that pays a monthly dividend. So again, we have a sizable long position in GLDI. Yep, that's hopefully you can see that spec. Yeah, these are, if you want to know favorite gold stocks, individual miners, I'll rattle off a couple that we have in a minute. But again, we prefer GLDI for a play on gold because even if gold doesn't go up, you're collecting a nice monthly dividend. And then you can wait for it to go back up to 2,000 area, take your profits, and then wait for it to come back down. Again, gold swings nicely. So that's the one we're looking at, gold. The corresponding one in silver is SLVO, and we have a sizable position in SLVO as well. Some others you can see, here's our risk reward profile on some of these others. You see the highlighted green ones are telling you that it has a reward to risk ratio of greater than 2. So you can see the next best one, it would say, is GDXU. This is a small gold miners 3x leveraged. So again, if you're looking for an ETF to play gold, that would probably be the next best one right now. So in terms of specific stocks, we own a number of gold miners. Let me think a second of all the ones we have. It's GAU is one, GORO, GORO. ASM is primarily a silver. We own them. Fury, FURY, we were long them. I mentioned GORO. Lode is actually LODE is also a gold miner, but the reason we bought them was for their battery recycling, their EV battery recycling technology. So LODE, they are also a gold miner. PZG, we had them on the watch list a while back because it looked like it was trying to pop PCG, and then it just never went. So we took them off the watch list. We are long PCG. USAS, it's run up a little bit recently too, and that's another one that we're long. So there's all kinds of miners. I'm not terribly interested in buying more individual miners. I would rather stick with the ETFs. They tend to be more stable. A lot of these miners lose money. I would recommend, again, this is not financial advice. This is for entertainment and education purposes only, and I'll put that disclaimer up now. A lot of these miners are not profitable. Some of them have very high debt, so I would highly recommend, if you're looking at a gold miner, an individual gold miner, check out their FinBiz profile. Are they profitable? Do they have high debt, etc. Now there is another one. It's JNUG, is a junior gold miner, and I'm not sure why he's not sorting in my gold category, but JNUG is also a popular gold miners ETF. So again, I think there's going to be opportunities in gold because of this Russian ban on Russian gold, and then we'll see what's next. What's Biden going to ban imports out of Russia next? So watch out for that. Maybe we'll have to think about what other commodities Russia supplies that might get banned. And then I think that's a good topic to start thinking about and talking about in our Discord. So if anybody has some ideas about what other commodities that Russia supplies that have yet to be banned, that could be banned, I think we could, skate in front of the puck and take advantage of those. So yeah, that's a good idea, I think. So since we were just looking at the ETF spreadsheet, I heard they just recently launched a new ETF that allows you to short Bitcoin. It was launched on the 21st. I think it's launched a little bit late because Bitcoin had already fallen quite a bit. So I don't know that there's a great swing opportunity. Might be a good day trade opportunity in BITI. Now, they're currently, as of Friday, their data wasn't available in FinBiz yet, so I haven't been able to run my tools to add it to our database, etc. But I did add it to our spreadsheet and to our ETF list. I want to watch that. The inverse of BITI, the ETF to long Bitcoin, is BITO. So again, like Tanberry, you were talking about your 401k, you probably can't, buy and sell cryptocurrencies in your 401k in Fidelity either, but these ETFs may give you a way to swing or even scalp Bitcoin in your 401k in Fidelity using these two ETFs, BITI to short, BITO to long. So I think we're going to find some nice swing opportunities in Bitcoin. And again, it's going to be much less volatile than the actual cryptocurrency because, again, it's an ETF, so it only trades when the market's open, etc. So another one I found that we talked about yesterday in part one as a precursor is this grains ETN. You can see it is futures contracts on 4 different commodities: corn, soybeans, soy, meal, and wheat. And if you look at the futures like we did yesterday, all of these have declined recently. They're still relatively high, so this isn't really at a bottom position where I'd want to buy it right now. But it's a nice addition to our ETFs watch list and spreadsheet to look for it for a longer term. So you can see it's still relatively high, but if it were to continue to come down, it's a potentially attractive opportunity. So we're going to add that to our list, keep an eye on it, and if the opportunity presents itself, we can use that then to long these various commodities. So I'll answer any questions y'all have, and I wanted to talk about some updates I've made to this ETF comparison template. Also, we're going to be granting our Patreon members access to the folder that contains this comparison spreadsheet. I'll send out the notifications as soon as I can to our Patreons of that they have access to this folder and some other spreadsheets we have in there. And what we've done is updated them using the Google functions that Douglas PC, he also goes by Brevard PC in some forums. He shared that with us, and here's the link in the notes to the posting of those Google functions. He also did some work. He was very helpful, and I want to thank Douglas PC again for his help in identifying these functions so that we could update these spreadsheets. So now this comparison spreadsheet, you'll see some changes in the column names, etc. We also are pulling the current price. So you can see how we're using these Google functions to pull the column name is the variable that we're pulling, and then the symbol name is the other input for the price function. So these are, I think they're delayed like 20 minutes, but it's relatively real time. It's a good way for us to check for opportunities in all these ETFs. So what I've done is I've added the functions to pull the price, and then it's calculating the risk, which is the current price minus the support level. Now, unfortunately, the support and resistance and bottom and top values, I haven't figured out how to get those from the Google functions yet. So I manually have to look at the FinViz chart and find the nearest support, the nearest resistance, and the top and bottom, put those values in there, but then it will calculate the risk reward. So we can see if we look at that gold guy who has somebody who has values. Yeah, I guess I don't have, well, there's GRU. There's the one I recently added. So when I did the research on GRU, you see I found the nearest support and resistance level, the tops and bottoms, and so it's calculating the reward and risk of the price relative to those support resistance. So that's the first set of columns. In this case, you can see it's only giving me a reward to risk ratio of 1. So it says there's as much risk as there is reward given its current price. However, we can see for a 52-week basis, it's calculating based on the 52-week low. So again, change to the column headers. That's the variable name for that Google function is low 52 or high 52. We put that in, and it will give us those values, and that will update automatically. So that's an enormous help to me. Again, thank you to Douglas PC. It saves me a lot of time and effort having to manually update those values, and it calculates the risk to reward for the 52-week range. So I can just, real quickly scroll through those. And again, the coloration is anybody who has a reward to risk of 2 or greater. You can see it's a conditional formatting I set to say, okay, if the value's greater than or equal to 2, then highlight it in green. So I can very quickly flip through these guys and see, who should I look at right now. There's an emerging markets ETF that's saying, hey, it's very attractive right now. So I hope that all helps. Again, our Patreons, again, everyone, please understand this is still very much under construction. I'm still working on it. It's not really, it's going to be changing, but I think we made some significant improvements, and I think our Patreons can benefit from the data that's currently available. So I hope that all helps. And again, if we'll be looking at this on probably a daily basis, identifying other opportunities that we can add to our watch list, etc., and notify you as appropriate. So does anyone have any other questions? Anything else we want to look at? If you're watching this after the fact, please, you can put a question in the comments. You can hit us up on our Discord. Again, the invite to our Discord's in the description box below. You can also find these notes to all of our recent weekly trading game plans in the Google Drive folder the link to which is also in the description box below, so you can reference these notes going forward. And it has these links as well, so you can use those. So the other things I'm still looking for is more ETFs to play treasuries more effectively, and also ETFs to long and short foreign markets, global markets, etc. You saw the one we had with the emerging market looked attractive. I would have to, look into that in more detail to see if that's something we want to add to our watch list going forward. This is an emerging market, a Vanguard emerging markets. So you can see its current risk reward may be attractive. So that may be one we need to do some further due diligence on and see if that's an opportunity right now. So. And also, we're adding more to our ETFs playlist, so you can see some of our comparisons where we evaluate various ETFs for a given category. I hope to do some more of those. We talked about gold. I'm hoping to do some on energy. You can see some of our oil and natural gas ETFs and do a more in-depth comparison of these and their pros and cons, etc. So keep an eye on our ETFs playlist. So we talked about the Biden ban on Russian gold and the opportunities there. Also, we've been talking for several weeks now about how to inflation and recession proof your portfolio. So please see the notes for previous recent part ones of our game plans. We have a whole list of stocks that may benefit or may be negatively impacted by both inflation and or the recession, and we recommend that you use those themes to cull or build your shopping list. Now, one of the other things I'll mention really quickly is, as we've seen, we're in a declining bear market. And again, our strategy is, we'll take profits. We talked a couple weeks ago about, you sell the rips in a bear market. So we're protecting our profits, moving our stops up. If we get stopped out, that's okay, because it's, probability it's going to roll over. We'll buy it back cheaper, and we'll keep doing that as the market declines. So my point being is, you want to have what they call dry powder. You want to have some cash available. So when something gets cheap, particularly ridiculously cheap, and it's something that's fundamentally they're going to survive the recession, etc. They look good. And you want to buy, then you can buy at a cheaper price. So I hope that all helps. So if there aren't any other questions, again, we have the poll about when the best time is to have these weekly trading game plans. Most convenient for everyone. It's on the community tab on our YouTube channel. So if you haven't already voted on which time is best, please go to the community tab on our YouTube channel and vote. Got earnings season again. Yeah, Tanvir. Yeah, and as we talked about yesterday, watch out for pre-announcing companies pre-announcing that they're going to miss. People are expecting them to start pre-announcing that they're going to miss earnings, and then they're going to, it's going to impact them and any sympathy plays. So we also do have some earnings this week, like Nike, etc. So keep an ear out. Anything right now with the amount of fear in the market and jitteriness, anything remotely negative is going to cause a negative reaction in that stock and anything remotely related to that stock, So again, please vote in the poll. We're still 10 a.m. is still the preferred time, so we'll stick with that unless we hear differently. So again, we hope this all helps. Please let us know in the comments. Please join us in our Discord if you're not already a member of our BeachBum trading community. We hope you'll choose to join us, subscribe to our YouTube channel, join us in social media. Again, you can contact us via the comments to this video, via our Discord. If you're willing and able to support us in our efforts, it's totally voluntary, but we do have a Patreon where you can voluntarily support us, and we try to add value as we're able for our valued Patreon. So again, thank you all for joining us for this live stream. Again, if you have any further questions, please feel to hit us up on the Discord and the comments, etc., via social media. And we hope you have good luck and have a great trading week.